Hey, I'm going to have a little talk with you about marginal tax rates. And people are starting to talk about this now. And so I just want to start out the conversation by saying I'm not very good at math, so I'm going to keep it very, very simple so that I can not have to deal with a bunch of notes and crazy calculations. I just don't want to deal with that. So everyone knows that 1% of 100 is $1. Okay, so 1% of 1,000 is $10. Now, marginal tax rates are usually like 1/10 of 1%, okay, for each $1,000, let's say. So let's say someone earns $100,000, okay, and they pay, $20,000 to the government, whatever. That's a good chunk of money, but they still have $80,000. They're not broke, right? Okay, that's a lot of money. Now, if you have a marginal tax rate, they've already paid their 20%, fine. But a marginal tax rate generally is going to go in 1/10 of 1% increments. So out of every 1,000, they're paying 1/10 of 1%. Okay, so they're not paying 1% on every $1,000, which would be $10. They're paying 1/10 of 1% on every $1,000. So that's $1 out of every $1,000. So for every $10,000 above 100,000, guess what they're paying? $10. Okay, $10 out of 10,000 because it's 1/10 of 1%. So when people say, "Oh, you want to go back to the marginal tax rate where we're paying 80%?" It's like, no, they're not paying 80% straight. They're paying 20% up to a certain amount, and then 1/10 of 1% on each $1,000 up to a total of 80%. It takes a long time just to get to 1% because you're going in 1/10 of 1% increments for each $1,000. So don't be fooled, okay? Wake up, pay attention, and learn. 1/10 of 1% of $1,000 is $1 freaking dollar. All right, that's all.